Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we are talking about the covered call. What we're going to talk about is the poor man's covered call and how I'm using it with Morgan Stanley, how we're generating massive cash on cash percentage gains using just a little bit of money. And I'm going to show you it's about $3,700. We're generating some $1,500 in 30 days if our shares are taken away. That's right. Investing $3,700, getting back $1,500 if our shares are taken away. I want you to stick around. I'm going to show you how I do that. But what I'm going to show you today is something that if you're not watching, you won't notice. Morgan Stanley has a dividend coming. And I'll tell you what, there's something in the chart that absolutely screams to possibly get involved for a covered call plus dividend capture investment strategy. I'm going to show you that trade idea today. I sent that to the members today and outlined exactly what I see and what I would do. So we have a little bit to talk about here. So I want you to grab that coffee, sit back, and just take it in. If you have to watch this video a couple times, make sure you do, because there's a lot here that I think you're going to like. But let's go ahead and start this. If you like anything you hear today, I want you to subscribe to the channel. I come back every week, show you timely and relevant covered call trades to maybe, possibly, up your game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. We're going to talk about the poor man's covered call. In the description below, and I'm going to mention this at the end of the video as well, is the brand new 2023 Ultimate Poor Man's Covered Call Tracker. You know I've had my free Poor Man's Covered Call Tracker at my website, cptdashboard.com. You go there, you download it, you use it. Keep the numbers in front of you. Well, I have a brand new one with all the built-in calculators, everything you need when we're trading using the poor man's covered call strategy. And what I want you to do is go to the link in the description and get your very own copy of the brand new 2023 Poor Man's Covered Call Tracker, the one I use and the one all of my members have. After this video, click in the description below and get your copy today. Now, what we're talking about is Morgan Stanley, and we're going to talk about two trades here. We have a poor man's covered call trade for which I used only $3,700. Potentially, if our shares are taken away, we're going to make $1,500. I'm going to show you the numbers. That is not snake oil. That is real. And I'm going to show you the covered call with dividend capture idea. The chart is absolutely screaming that it could happen again. I'm going to show you that here in a minute. This is a trade that I recently did using the poor man's covered call. So let's go ahead and set this up real quick. If you don't know what the poor man's covered call is, it's quite simple. Instead of owning shares, we are going to use a Leaps call option to simulate share ownership. Now, what that means is we go out and buy a 6-month to 8-month Leaps call option deep in the money where the delta represents about 95 to 96 delta. So when the stock moves $1, the Leaps call option, which has a delta of 95 to 96, is going to move 95 or 96% of a $1 move. With that Leaps call option in hand, we now have the option to buy somebody's shares at that strike price we picked. We're not going to do that for the most part. What we're going to do is, because we have the paper to buy somebody's shares, we're going to go ahead and start writing near-term covered calls as if we own the shares. See, that's the poor man's covered call. Instead of buying shares and putting up all that capital, we're going to go ahead and buy a Leaps call option, which is considerably cheaper, giving us the right to buy somebody's shares, allowing us to write near-term covered calls. It sounds complicated, but what we're doing is we're simulating stock ownership by buying that deep in the money Leaps call option, and then we can write near-term covered calls as if we own the shares. You feel like you're part of the group, owning shares, but you really don't. It's for protection. Well, if you've been watching my channel, you know I currently have 10 Leaps call options on Morgan Stanley. In fact, I have them at the 97 Delta. We are writing covered calls on that position, and I've made about $3,600 in the past month. Well, I decided to get a little creative. What I'm going to do is I'm going to use the same strategy using a leaps call option, but we're not going to go so deep in the money. What we're going to do is we're going to pick the March 2024 expiration, but we're not going to go so deep in the money. Instead of picking that 97 delta, we're going to pick the 62 delta. And as you can see, I went ahead and bought the $77.50 in the money leaps call option. I only paid $7.40 for that right. It is the 62 delta. Now, I did pay a tremendous amount of time value here. That's the true cost of the trade, but we're not going to worry about that. This is a 3-month trade, or that's at least the idea. We're going to use this leaps call option for 3 months, even though I have the right, but not the obligation, to buy this guy's shares for 6 months. We're going to go ahead and buy that March 15th leaps call option. Well, we're hoping not to use that. We're hoping not to buy this person's shares. But what we want to do is over the next 3 months, we want to cherry pick these nice out of the money strikes, hopefully having our shares taken away on any one of these trades at our strike price. Now, what you need to understand is when I bought this leaps call option, Morgan Stanley was trading for about $80. So, with that said, I went ahead and wrote the 82 strike. I got $1.82 for it. If the stock moves from 80 to 82, that'll essentially be a $3.06 move, or on $3,700 invested, $3,700 invested, because you could see I did 5 leaps call options. That will be a whopping 32-day cash on cash return of 41%, or $1,500 if our shares are taken away. And if our shares are not taken away, meaning Morgan Stanley did not trade above 82, I keep my shares, but in theory, I don't have shares, right? I'm simulating share ownership. I keep everything. We go ahead and we write another covered call. Well, if that happens, I keep the $930 in premium I collected, and we do it again. That would be trade number 1, and the idea is we want to do this for 3 trades. But the bigger picture is we want this sucker to stay near $80 a share. Now, the trade breakdown is quite simple. When the stock was trading at about $80, I went ahead, I bought that leaps call option, and now it's on. I'm going to go ahead and sell that 82 strike. I got $1.86, it's 5 contracts, and it expires November 3rd. You see it right there. So this is a 32-day trade. Notice, cash on cash invested. I'm going to collect, if the shares are taken away, $1,500 on $3,700 invested. So you could see where your return on investment numbers are out of this world. And if I am not in a position where Morgan Stanley finishes at or above 82, I will keep everything and keep the $930. Again, that's 25% on $3,700 invested. So this is a poor man's covered call trade. Instead of using the deep in the money 95 delta leap, we went ahead and used the 62 delta leap. Now, why did I use the 62 delta leap? I kind of split the difference, right? Well, most people will sell the 30 delta, and I use the 95 delta leap when I buy my leaps. So I figured, let's just split the difference and go 62. So that's what we're working with. And I'll also tell you this, because it was under $10, that leaps call option was under $10, I felt like I could really manage this trade. At the end of the day, what am I risking? I'm risking $3,700. That's all I'm risking. And my very first trade brings over $900 if my shares are not taken. So, with that said, if we do this for at least 3 trades, we'll get all the money back that pays for the leaps call options, and then we have 3 months to possibly continue to generate that kind of premium. But the real plan is to have our shares taken away at 82, we collect everything, make max profit, and we move on. That is a poor man's covered call trade idea that my members got. Actually, I executed on it. Went ahead, sent it out. A couple hours later, I found time and I did this trade. As you can see, it's right here. I went ahead, and when the stock was trading at $80, I did use 5 leaps call options, but that does not control 10 shares. That controls 500 shares. So as you can see, this trade is going to go on. It's going to expire November 3rd, and that's how we use a Leap's call option to generate near-term covered call premiums as if we own the shares. This is a little bit more out of the box than I usually do. I usually always preach using that 95-96 delta leap, so we get as close to stock movement with our leaps when a stock does move. Now let's talk about why I got involved with the trade. See, this is all after the fact. I put in the homework on the front end, showed the members exactly why we would do this now. And I'm going to show you exactly what the charts are absolutely screaming with a covered call plus dividend capture trade idea. Again, at the end of the video, I want you to click the link. I want you to get your brand new Poor Man's Covered Call Tracker. There is an absolute unbelievable bonus in there. You have to go to the link. It's at the bottom. I'm not going to show it to you here. You need to click the link and head down. Oh, is that it right there? You might want to check this out if you've ever been interested in joining my membership. That's right. If you go get your very own 2023 brand new Poor Man's Covered Call Tracker, you're also going to get one free month of the membership. Hey, look, go get it. I would love to welcome you aboard. All right, so the video is getting long. I want to talk about this covered call plus dividend capture trade idea. Okay, so if you don't notice it, let me help you. First of all, a couple things. We've got Morgan Stanley trading absolutely near its bottom, which I've recently wrote about, 77 being a very solid bottom. Although I thought 80 was a good entry point, turns out 78 is a better entry point. Today you get about a buck move up, but we're in that range. 77 to 80 is a good support for Morgan Stanley. You can see it right there. And in fact, it's trading at the bottom of the Keltner channel mid. Remember, the Keltner channel represents a stock's trading range. Doesn't predict anything. What it does is just show you its trading range. So when it's trading at the middle of the Keltner channel, we would love to get involved when it's trading at the bottom of the Keltner channel. And guess where it's trading? At the bottom. And in fact, when we draw back support lines, it's very, very plain to see it's testing long-term support. So if we're going to get involved with any stock, we'd love to buy low. Well, this would be that time to buy low. At least that's what I'm thinking. So looking at a couple things, we do have earnings coming up. Now, I want to make mention, over the past 3 quarters, Morgan Stanley has beaten the number. And not only did they beat it, they absolutely smashed it. And many times, the stock would rally from the 70s into the 90s. Now, why it would peel back into the 70s? Look, stocks ebb and flow. What we need to do is take advantage of these moments. So we got earnings coming, but we also have an ex-dividend date coming, and it's lurking out here. Let's take a look at over the past 6 dividends where the stock was trading and where it traded as the X date happened. And it doesn't take much to notice this. Notice here are your X dates. So you have to own the stock one day before the X date so you can then get the dividend. Okay, that's what happened. You have to buy it one day before the X date so you are entitled to the dividend. So notice, everywhere the stock has its X dividend date, what do we have? It trades in the low, where it's currently trading now, and it rallies. What happens next time? Trading at the low, rallies, 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 rallies 6 times. Okay, this isn't me making this up. This is not snake oil. You can see it. Yeah, granted, we get a sell-off here, but that's the entire market. Notice here, once it bounces off the bottom, every single time into that X date, it rallies. It's right there. You can see it. And quite frankly, look where we're at now. Now, I don't have a crystal ball, and none of us do, but what I'm going to tell you, 6 times in a row, and here we are getting this massive sell-off in the stock market. All the fluff coming out of these stocks. What do you think about this? The X date is out here. It's trading near the bottom of support. What are the chances that it starts a dividend run? Now, I'm not telling you it's going back into the 90s because I don't know. But all it has to do for me is get to 82 bucks based on my last trade that we just talked about. Right? $82 was my strike price for my Poor Man's Covered Call trade. What if I bought the stock right here, right now, 79 bucks? We know in 2 weeks we have earnings, so we're going to have to deal with earnings, but I don't really mind because I'm going to bank on the fact that they hit their number, because over the past 3 quarters, they've smashed their number, and the stock market, for the most part, has had a decent year until this recent sell-off. So what I'm going to do is bank on the idea we don't get as much volatility using the covered call plus dividend capture strategy, which is typically buying the shares and then writing an in-the-money covered call. So we get that in-the-money premium. We hope to have the dividend taken away from us, but because we sold the in-the-money covered call, we're going to go ahead and collect max premium. But see, here's the deal. We're going to do this trade 1 week before the ex-dividend date. So we're going to do this trade 1 week before ex-dividend, and we're going to have our covered call expiration 1 week after that. And it's going to be in the money. The stock would have to take a dip for you not to have your shares taken away. And if you believe what I believe, we're actually going to get a little bit of a dividend run with a positive move, then it's likely you'll have your shares taken away. So in 1 to 2 weeks, you can make 2 to 3%. And when you extrapolate that out to 12 months, you're absolutely killing it with that kind of return on investment. Now, I could also do this. I could actually buy the shares down here. We know the X date is coming, so I put that strike price just a little bit above where I think the stock might get back to about 81 or 82. And as it makes that little dividend run, which I think it will, it's not going to get there before the X date, right? It might be moving higher, but it may not get there. So I collect the dividend. I collect the dividend because I own the shares. And now the stock could be over that potentially very easy $81 strike. So I would make a little bit of stock appreciation. I would collect the dividend, and I'd also collect the covered call premium. It's called covered call with a dividend capture strategy, where what we try to do is buy low. As the stock makes a little bit of a dividend move, we go ahead and collect that dividend because we put that covered call strike price just a bit out. For the stock to get there, it might take a week or two. Guess what? We collect the dividend, and then if it reaches, we have our shares taken away. And if it doesn't reach 81, then guess what? We keep the shares and we do it for another 30 days. Absolutely knocking it out of the park, where we not only pick up a very short-term 1 week to 2 week covered call plus the dividend, then we get a full 30 days covered call premium. So that's what I want you to see today. I want you to do your due diligence. I want you to think about these things. We have this dividend coming. It's trading at the absolute bottom of long-term support. So it's more favorable that Wall Street will come and buy the stock versus not. So that's what I sent to the members. And to be honest with you, I might actually buy 300 shares this week and go ahead and do this very exact trade. I do it all the time. Absolutely love the challenge of buying the stock low, trying to pick that strike price for which the stock will go through the X date. I get paid the dividend, and then they take my shares. I wash my hands of the trade, making max profit. Hey, look, make sure you go get your brand new 2023 Poor Man's Covered Call Tracker and get your 1 free month if you get your tracker. Would absolutely love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.